Good morning. Welcome to the next episode of Advanced Q&A. My name is Amelia Thomas, and I am so happy to be before you today. Now, we are definitely doing something new today. You might be watching this on Facebook or somewhere else. We're streaming it to a few different platforms. We're testing out our new setup and equipment. So I would love to know your thoughts and comments. But we're going to be doing these segments on a weekly basis, and I just wanted to bring some good information to you today, so I hope that's okay. Make sure you leave those questions or comments down in the chat box so I can see them and I can go back to them and answer them throughout the day. As well as if you have just any tips, tidbits, tricks on how to improve our live stream, feel free to drop that down in the comments too. But again, this is the advanced Q&A segment. How this segment came about is that I actually have a client who is very much into the marketing space. And they asked me the question one day, what do you do with all of this content that you have in your possession? And I was like, what are you talking about? What content? And they were like, I know I ask you a zillion and one questions, so I know I cannot be the only person. And honestly, that's content that you can repurpose. So she suggested that I take these questions and I start answering them live, and that is what we are doing today. So thanks so much to that one particular client for helping me realize how much content I had in my possession and just didn't even realize, because she basically was stating that I underestimate how little my clients know and that I need to share more of this information. So here we are. But before I get into some questions, we have 5 great questions today that I'm going to address and answer. But before we get into those questions, I have to read a disclaimer to you. The information provided is for educational purposes only and is not intended as financial, investment, tax, or legal advice. Viewers should not act on the basis of any of this content without seeking the appropriate advice from a licensed professional. This segment does not create a client-advisor relationship. Please consult with your own financial, tax, or legal advisor for advice tailored to your individual circumstances. Now, again, you're going to have questions throughout this presentation, questions based on some of the information that I provide to you. And if you would, go ahead and drop those questions down into the comment box. We will go ahead and collect those questions throughout the day. Some of those questions we'll answer in our Facebook group, which is Hush, It's a Secret. Other questions we'll answer via email. So if you're not on our email list or if you're not on our Facebook group, what are you doing? Go ahead and hop on so we can get your questions answered. Now, a little bit more about me. Again, my name is Amelia Thomas. I'm the managing partner of Empire Capital Ventures. We work with 7- and 8-figure business owners to help them generate 9 figures in wealth through advanced tax planning and wealth management. I'm also the host and founder of the Secrets of the 1%. The Secrets of the 1% is an education and training consulting firm dedicated to helping everyday Americans, especially those from marginalized communities, take advantage of the 1% just like everyone else. So we are really dedicated to bringing this information into the marketplace to help you achieve the wealth or build wealth just like the 1%. Now, I do not do this information or I do not do this work alone. This is about a fourth of our team, but these are just some of the ladies that are working behind the scenes to help make sure that this ship continues to stay on track and move forward every single day. So if you ever see these ladies hanging out in the comments, or even if you just saw them on the street, be sure to tell them hello and thank them for all the hard work that they do to help keep me on track, and therefore I'm able to deliver for you. Now, again, you're going to have questions. I got answers, okay? I got answers. So make sure that you put those down into the comment box and we'll go and collect those and answer them throughout the week. With that being said, I hope you're ready, because now we're getting into the juicy part, which is the content. So, question number 1. What are the best options for 401k? How should I invest my 401k into my real estate? So this is a very common question, and there are a few pieces to this particular answer. So I'll do my best to help stay on a straight path here, but I may color outside the lines a little bit to answer the question. But essentially, when you want to invest real estate in your 401k, there are a few things that you have to do. Number one, you're not going to invest in real estate in your 401k if you have a traditional 401k plan. So if you're working for an employer, you have a 401k with that employer, you cannot invest in real estate unless you're investing in mutual funds or EITs or stocks that are real estate related. Outside of that, if you're trying to say, hey, I want to be a 20% owner in an apartment complex or some type of shopping center or things like that, you will not be able to do that in a traditional 401k plan. However, if you do have a 401k plan because you are a business owner, meaning you're in control, you're the company administrator, and you're in control of this plan, you can actually invest directly into real estate directly with a 401k, but it has to be what's known as a self-directed 401k or a self-directed account. So I want to take a few moments and speak about a self-directed account. A self-directed account is not the same type of an account that you would find at Vanguard or Charles Schwab or Fidelity. It's not those types of accounts. Now, if you call them, they're going to say, yes, of course, we have self-directed accounts. But what they mean is we have an account that allows you to pick amongst the 10,000 mutual funds, ETFs, stocks, and bonds that we have on our platform. It is not a self-directed account in the sense of being able to control how you invest your money in terms of alternative assets. So when you want to invest in alternative assets, it has to be a true self-directed account, and Vanguard, Fidelity, Charles Schwab, those type of custodians are not self-directed custodians in that sense. So you may be wondering, what are some alternative assets that you can invest in using your 401k if you are a business owner and you are the company administrator? You can invest directly in real estate. You can invest in physical gold and silver. You can invest in cryptocurrency, if that's your thing. You can invest in a number of things. You also have some people who use this money to lend. They're literally a private lender. When you hear about people going to private lenders to get money to rehab a property or to put down a down payment on a property, they're using private lenders. You can be your own private lender. Now, there are a ton of rules and regulations to make sure that you stay and maintain compliance when you are investing as a alternative, when you are investing in alternative assets in these particular accounts. So make sure you're very clear on what those rules are, but those are definitely options. Now, you can have a traditional 401k if you have employees. You can have a solo 401k if it's just you. You might have a side hustle where you have a full-time W-2 job, but maybe you have a side hustle that makes really good money, maybe $40,000, $50,000, $60,000 a year, and you're looking for a way to not only reduce your taxes, but continue to help that money grow, and you want to invest directly in real estate, then guess what? You potentially have the ability to open a solo 401k and do the same level of investing. So there's many different options there to choose from. However, there is one word of additional caution that I want to mention when it comes to investing in real estate using a true self-directed account from a retirement plan or any type of qualified plan. And that is, you will not receive any additional tax benefits over and beyond the tax benefits of that qualified plan itself. Let me break that down in case that was a complete mouthful. What that means is that a lot of people like to invest directly in real estate because they can create losses, even though they may be profitable. They may be profitable in their bank account, but on their tax return, it shows a loss. And that's how people, get around things, right? Well, that tax return shows a loss, and therefore it's reducing their taxable income. Well, in this case, you don't receive that additional tax benefit. You can only receive the tax benefit of investing directly in the 401k itself, which means that your contributions are going to be tax deductible, they're going to be tax deferred, and ultimately, when you get ready to pull money out of that account, if you're over the age of 59 and a half, you will then pay taxes on that money at that point, which you're not going to receive any of the additional tax benefits as though you invested in real estate itself. The account of it being a qualified account, a traditional traditional 401k, solo 401k, has its own tax plan, and those are the only benefits you would qualify for. Now, if you're like, hey, I have all of this money, I really want to invest directly into real estate, then you need to have a conversation with a financial planner, a financial advisor, someone who can do that analysis for you and help you determine, number one, if that's the right move. If you need to go ahead, you might have to pull in a tax advisor. If the financial advisor or planner can't pull all those pieces together for you, you pull in a tax advisor who can help you understand, hey, if I were to pull all of this money out of my 401k right now and pay the taxes now, what does that tax bill look like for me? And what is that going to mean for me in a few years as this money grows? So sometimes your tax advisor and your financial advisor, if they don't have the tax experience, or maybe their firm doesn't allow them to speak really about taxes, you're going to need 2 or 3 people together to help you make that decision. That is not a decision you should make lightly. Okay. And also, do not make that decision based on someone who is not licensed telling you to do so. I have seen some information floating around the marketplace or online here lately. Someone is out here who is not licensed to the first with an investment license, telling people to liquidate all of their 401ks or traditional IRAs, whatever the case may be, to invest it in something else. Make sure that you are talking to the right types of individuals to get that advice. Question number 2. I have 2 children in their 20s. How should I incorporate them into my real estate business? So the short answer to this is that you just have to get started. And typically what people will do, they'll start with allowing their kids to help them maybe manage a property. That is, one of the typical things that you would do. You would let your kids help you manage that property. You can start by allowing them to be in a position where they're at the table with you and they're talking to lenders, they're talking to the real estate agents, they're talking to the brokers, and they're learning how to do an actual proper real estate deal, right? That could be another option to help get them into the groove of how to invest in real estate. And you do that for, a period of time. And then if you still want to do business with your kids, because at this point they really haven't been in a position where they can cause you a lot of harm, then maybe you guys actually go in and do a deal together. Maybe you're 80% owner, they're 20% owner. They have a little bit more skin in the game. So I would start something very, very low risk. Again, allow them to help you manage the property. Allow them to kind of be at the table when you're talking to bankers, lenders, brokers, agents about this next deal. Allow them to be at the table when you're analyzing these deals to make sure that, this is going to be a good decision for you. Everyone's investment criteria is different. Some people are like, hey, I must have cash flow. Some people are like, hey, I don't need the cash flow. I'm looking for the long-term appreciation. So make sure you understand what your investment criteria is, as well as your kids, so they can understand what to look for in certain properties. Now, if your kids are younger, I really recommend that you get your kids involved as young as possible. Some people even have teenagers. Some of your teenagers, 13, 14, 15 years old, they're old enough to start learning and understanding how real estate works. So I would try to involve your kids as early as possible. But if you have kids in your 20s, they're probably off in school, or, they have their own lives, they have full-time jobs. Some easy things for them to do would be to help manage that property, or to have them at the table helping to understand and analyze deals before you actually bring them onto a deal as a partner or actually make them a owner in your own real estate companies. You want to make sure that they have sufficient skin in the game and they understand what's going on before you make such drastic moves. Question number 3. How do holding companies work? I get this question quite a bit. And the first thing that I want to tell you is that a holding company should hold you up in the event that you're litigated against. Now, what does that mean? This holding company should not really have additional liabilities in it beyond the interest that it's holding in its subsidiary or child LLCs. For example, I have a client, they have 23 child and subsidiary LLCs, meaning that they have a minimum of 23 properties. I think it's probably close to 50 or 60 properties across the board. But all of these are in their own LLCs underneath the holding company. And they have one QuickBook file. That QuickBook file is broken up into classes. So we're able to monitor and, see how each property is doing on a monthly basis. Then all of that information flows up to your holding company. That holding company does not own any vehicles. That holding company does not own any other properties directly. It doesn't own anything that has a lot of liability. It doesn't even keep a lot of cash. We put cash somewhere else. It doesn't even keep a lot of cash. It is literally a holding company that holds the financial information of the 23 subsidiaries or child LLCs beneath it. That's it. It files a tax return if there is a partner. 1% partner, 99% partner, 50-50, it doesn't matter. It has its own tax return, which we recommend holding companies that have that type of activity. We want it to have its own tax return anyway. We do not want that much information on a personal 1040. That is a hard no, hard stop. And if you have a lot of real estate on your personal 1040, you need to have a conversation with someone about that. But all that information rolls up to the holding company. The holding company is going to produce a K1. That K1 is what's reported on the individual tax return. Again, it should hold you up in the event that you're litigated against. And what that means is that, let's just say child LLC number 8 is litigated against, you lose. Now all of the assets are at risk, right? We don't want all of the assets at risk for the other 22 LLCs, just the ones in LLC number 8. But if that holding company, because liability travels up, as long as you don't commingle, it travels up. We want that holding company in a certain state. Those states can be like Wyoming, Nevada, states like that. But as that liability travels up, we want it to die there too. Okay. So you do have to be mindful of how you set up your holding companies, the states you put them in, that type of thing. Particularly as you build your wealth and you have more and more properties. The first few, it may not be, that big of a deal, particularly if you already have holding companies in other states, that's fine. But it is something to keep in mind because, again, liability travels up and not left and right. Left and right means all of your other subsidiaries are at risk. We want that liability to travel up. Now, if you commingle, meaning that you're using business money to pay for personal expenses to pay for business things, and you don't have a proper documentation or paper trail, then you do open up liability, and you would have pierced that corporate veil, allowing whoever is litigating against you access to those assets. So again, you want to make sure that you're not commingling so liability can travel up and not left and right. Question number 4. I feel overwhelmed. I don't know where to start. So I actually remember this particular question from this particular client, and I realize it's not a question. It's really a statement. But they were overwhelmed. They had a lot going on. I can't even begin to tell you all the things that they had going on. But they really needed someone. I mean, they had really good people on their team, right? Like they had a really good CPA. They had a really good tax advisor. They even had a really good financial planner. They just didn't have that person on the team to help them pull all this stuff together so it made sense. And so that's what they brought us on to do. Basically be the quarterback on the money team, pull all the people together, all the information together to help it make sense, to put it in order so they know what's going on. So if you find yourself in this particular situation, you're feeling overwhelmed, you don't really know where to start, I would first start with working with someone, maybe someone who has like financial project management experience, or maybe a fee-only advisor who is more knowledgeable on assets outside of stocks, bonds, and mutual funds. You want someone that has a pretty good amount of experience in alternative assets, especially if you do a lot of investing in alternative assets, to help pull all this information together and to pull all the parties together to make sure that whatever plan that has been built continues to be carried out, or if that plan needs to be revised, everyone knows where things are so they can be revised. I would start there. I would also start with just literally taking like an Excel or a Google Sheet document and just listing out, like just do a brain dump, like list out where you have all of your accounts, the account numbers, how much money is in these accounts, the properties. Like when a client onboards with us, we send them a spreadsheet and they have to list every single property that they have, that they still have ownership in. And we want the state that property is located in. If it's in an LLC, we want to know the name. We want to know what state the LLC was established in or organized in. We want to know the property address. We want to know how much you bought that property for. We want to know the balance that's still on the property, the interest rates. We also want to know if you did any renovations. If you did any renovations, how much did you do in renovations? Have you done a cost segregation? Have you taken any bonus depreciation? So we're asking a lot of questions about these properties. I think one reason why so many people have issues at tax time when it comes to investing in a lot of real estate is because they have things all over the place and they don't have a single piece of documentation that lists everything you really need to know high level about that property. So when a client onboards with us, like that's one of the first things we make them do. List all of their real estate, as well as list every single entity that you own, because that's another issue that we run into. Sometimes tax returns aren't filed because we didn't even know there was an entity that existed or that, something should have been filed. So we make our clients list those things out. So if you're in a state of overwhelm and you have a ton of financial things going on, that is exactly where I would start. I would start by documenting all of your real estate, all of your investments, where they're being held and housed, who's the custodian, as well as all of your entities. I would find someone, either someone who's a project manager who has experience with personal finance and investments, or a fee-based financial advisor or planner who can take that information and help you make sense of it. So that's exactly where I would start. And I would go ahead and start now. Like, don't wait until 2025 to get that going. Question number 5. What strategy should I take to make sure I am financially ready to get married in 2 years and have kids? Oh, this is a good question. So a few weeks ago, there was a post floating around on social media, and it asked the question of what are the 3 most important financial decisions that you will make in your lifetime? And I typically don't comment on these things, but I felt compelled to comment on this one. And I said, number 1, getting married. Number 2, who you choose to procreate with. And number 3, how you feel about yourself and how you show up in the world. How do you display self-confidence, self-perseverance, determination? What does that makeup of you look like? Those are the 3 most important financial things that will happen in a person's life, in my opinion. And I'm just one person, right? But coming back to the portion about getting married, a lot of people have signs long before they say I do and long before they get divorced that the person that they are marrying is not a financially responsible person. They have those signs. They choose to ignore them. But divorce due to financial infidelity or financial mismanagement, it's like top three reasons why people get a divorce. Okay, top three. So it's something that you cannot ignore. Now, if you're dating someone and you see these signs already, you see the signs of, oh, they spend every single dime that they earn. They don't make any money. They don't save any money. Then that's a red flag. The person you're dating has a lot of credit card debt. They don't pay these credit cards off every single month. They're literally making the minimum payment possible. That's also a red flag. Another red flag is not even talking about finances before you get married. That is a 5-alarm fire. It's terrible. If you're getting married and you have no idea the financial position that you're marrying. I know a lot of people like to marry for love, but at the end of the day, marriage is a contract. And if you don't think it is, ask the people who get divorced and lose half of their assets. So it's all fine, well, and dandy to get married because you love someone and you want to spend the rest of your life with them. But you want to spend the rest of your life with a person that you can stay with because they know how to manage money. Now, what if this person is very upfront and says, I've never really been good at managing money. We didn't talk about this when I grew up. We were very poor, and therefore, I want to make sure I have everything that I need and want. So I was just raised with bad financial habits. That's fine. If that person is upfront with you, like they are accepting the reality of their situation, you guys can work on that. But you need to work on that before you get engaged. You need to work on that before someone pops the question. When you pop that question, at that point, you should know, like, they have met all of my major boxes. We're going to be okay. So that means you might need to help bring that person along, find a financial counselor, a financial therapist. This is not a topic really for a traditional financial advisor or even a traditional financial planner. Like, we're just not trained to deal with that type of issue. We're trained to help people grow money. We're not necessarily trained to help people take better care of their everyday financials because, believe it or not, it's a lot of psychology. And that's why, personal finance is more behavioral in nature. I can tell someone to the blue in their face, you make X amount of dollars, your bills are this, you have $2,000 left over at the end of the month, so you should be saving $1,500 a month to grow your wealth to $1 million in 20 years or whatever the case may be, right? But behaviorally, they may do something different that makes no sense whatsoever. And that person needs to work with a counselor or a therapist to figure out what those issues are so they can overcome them. You do not propose to a person who has those type of issues that still need to be worked out. Now, there are some couples who are like, hey, I'm just not good with money. I'm just going to let my spouse pay all the bills and do all the things. I do not recommend that. Don't recommend it at all. I'm not saying that you should not trust your spouse, but I cannot tell you the number of horror stories I have heard from people who have allowed their spouse to just maintain control of the money. As long as money was in that account to pay the bills and do, other small other things, they were fine. But guess what? When that spouse passed away, they were in shambles. They didn't know where anything was. They didn't know how much money, was put away for rainy days or anything. I mean, terrible. Sometimes that person just ups and leaves and takes the money. Spouse can't really do much about it because they don't know where it was. They don't know how much. I mean, they just don't have any information. So while, yes, it may seem great that one person can maintain their household financially, I still think once a month, once a quarter, you should really sit down and have that conversation with someone or with your significant other to discuss your household finances, just to make sure you're on the same page, make sure you're saving money, you're investing money, but you should not be in the dark about your finances. No one should in that house. Now, if you do not have that type of certainty about the person that you want to spend the rest of your life with, then you need to go back to the drawing board. And you need to figure out, I'm not saying go out and dump this person, right? I'm not saying that at all. But what I am saying is you need to make some hard decisions on, can you overcome those challenges and those barriers? And again, you might have to go to some type of counseling. You might need to go to counseling together to help work through those issues before you make the final determination of, yes, I can be with that person. So obviously that boils down to kids, who you procreate with. Even if you're married and decide to have kids, finances are going to get strained. That just happens when you have kids. So just make sure that you are making the right decisions financially. All right. Will you be the next person to conquer your finances? If so, put something down in the comment box and let me know, because I just gave you guys some fire information today. And I want you to take action and utilize this information starting today. But I also have something else in store for you. I want you to go ahead and sign up for our next 5-day Build Your Wealth Empire Challenge. We have an amazing challenge that's upcoming. Go ahead and you can visit the website at www.buildyourwealthempire.com to learn more. And let's talk about these, the challenge agenda, the topics that we're going to be covering each day. Day 1, we're going to focus on flipping the Bezos billionaire switching you. Day 2, the 4 doors your new net worth will unlock. A lot of you have heard me talk about being an accredited investor. And I think everyone should strive to be an accredited investor. But when you reach that, it unlocks 4 doors for you. I want to share what those doors are. Day 3, I want to talk about how to play the zero tax game and win. I want you to, again, learn some of these secrets that the 1% use every single day. And they're using the same types of accounts and investment strategies that you can use to win the zero tax game. Day 4, I want to focus on the free money gap you've been denied access to. We're always talking about using other people's money. We're always talking about how to get access to more loans, how to get access to money we don't have to pay back. I want to talk about that on day 4. And day 5, I want to talk about manifesting like the Rothschilds. But here, we don't just manifest. We don't just pray. We don't just hope. We also put things into action so we can make these things that we're manifesting and dreaming of become a reality. Now, this is not for you. This challenge is not for you if you're the person who's like, I don't have 5 days to commit to this. I barely have a few hours. I'm not ready to take charge and take control of my financial situation. This is not for you. Now, if you're just saying, hey, I don't have the time, but I'm ready to take action. I'm ready to move differently. I have great people on my team. I'm just missing 1 or 2 people. I'm ready to move that needle forward. Then that's great. Just send us an email. But if you're that person that's like, hey, I got the time. I'm ready to learn over these next 5 days. I'm ready to implement each day. I'm ready to crush it. I'm ready to build my plan for 2025. I am ready to get stuff done. This challenge is for you. Now, if all this did was gave you the confidence and peace of mind that you're finally moving forward and you're finally putting the right pieces in place. Would this be worth it to you? If all this did was help you get your finances in order, you know where everything is. You know how all of these pieces play and move together. Would that be worth it to you? If all this did was gave you the confidence and the peace of mind in knowing that you finally have a resolution to understanding this money that was left behind to you and how you should move that money so you don't lose it all in taxes, would that be worth it to you? If all this did was help you find that one missing puzzle piece of a service provider, you might have a great bookkeeper. You want to keep that person on the team. You might have a great tax advisor. You want to keep that person on the team. But you don't have necessarily that good wealth advisor who can see things from a higher level. And now you're like, okay, I finally found that person. I finally found that team of people. Would that be worth it to you? Then if so, I encourage you to go ahead and register for the Build Your Wealth Empire Challenge that is happening in just a few short days. Retail value of the challenge is $4.97. You won't pay anything close to that. General admission is $0. $0. No reason why you should not sign up and participate in this challenge. $0 to get started. You can do so at www.buildyourwealthempire.com. Again, www.buildyourwealthempire.com. Now, I want you to take massive, determined action. And when do I want you to take that action? I want you to take that action now. Not tomorrow, not next week, now. Even if you choose not to sign up for the challenge right now, but I don't know why you wouldn't. But even if you chose not to do that, I shared some phenomenal information today. I share information that the 1% know. That the 1% use to drive down their taxes and continue to build their wealth. That's the kind of information I shared with you today. So there is not a single, everyone has the opportunity. Every single person has the opportunity to get this information and apply it to one area or facet of their life. Every single person. So, when do I want you to take massive determined action? I want you to take massive determined action now. I want you to figure out something you can go work on today. And I want you to register for the challenge. You can do so at www.buildyourwealthempire.com. Again, retail value is $4.97. You won't pay anything close to that. General admission is $0. $0. www.buildyourwealthempire.com. Now, if you have questions or concerns, you left those down in the comment box. We're going to go back and we're going to find those. We're going to address them throughout the week via email. So if you're not on the email list, get on it. If you're not in our Facebook group, hush, it's a secret. Hop in. We're going to address any questions that you have in those two mediums. And again, today is our first day actually going live with this particular information. So if you stayed in, you tuned in, thanks so much for watching. Please tell me, how did I do? Give me some words of encouragement. Give me some feedback. We look forward to improving it. But this particular segment, we'll be doing this segment once a week. So I look forward to seeing you next week. Have a great day.